The management, Ajith Kumar Mittal, Executive Director of Indiabulls Real Estate, joins us now. Mr. Mittal, good morning and thank you for joining us. Now, let's talk about the very interestingly you've spoken about the NCR region doing quite well. Could you also, indicate to us that what special market and green shoots are visible in the entire NCR margin?
Well, looks like the interesting times for the sector. Real estate sector has gone through tough times. Last couple of years have been very trying, but now there are some green shoots clearly visible for the sector as a whole. I, as a part of the real estate development market, can definitely say that some of the buyers are returning to the market. All the key markets, be it MMR, be it NCR region, and also some of the southern markets and some of the other micro markets are showing some signs of revival.
You've been in the thick of things regarding the reconstruction of the commercial operations of your company. Give us an update on that.
Yeah, our company, particularly our commercial real estate activities at an inflection point. We were one of the earliest players to have branched out big time in the commercial office space. Some of the prime commercial office spaces in Mumbai, we were the pioneers, which are really benchmark. We defined sort of a new standard in the commercial office space industry. So given our thrust on the rental yielding assets of late, this is an area which is now emerged as the prime focus for us. And not only these Mumbai properties, which are Indiabulls Finance Center and one Indiabulls Center, but also a couple of others, including one at Chennai and a couple of them which are under development at Gurgaon. We have realized that our key strength lies in the commercial assets. And that's why there is some sort of focus to restructure this part of the business, while development side of the business would also continue to be the mainstay of our thing. But commercial real office space, because we know that we have annuity income, a very good solid rental income stream coming from these assets. So this is going to be the key driver for our businesses in the future.
Right. Mr. Mittal, morning. We understand that you're going to be bringing in a strategic investor in the commercial arm as well. At what stage are the discussions currently in, and how is it that you're valuing the commercial operations?
Well, on this specific deal, unfortunately, I am constrained by our non-disclose agreement at this point in time. I'll not be able to say much, except that yes, we do have plenty of interest from all the potential investors, given some of the assets that we have command a lot of premium. They are almost fully occupied office complexes, particularly the ones in Mumbai and also the one in Chennai. So predictably there's a lot of interest, and we are in talk with the prospective investor that might likely come in as a strategic investor in these arms. And the valuation and all, of course, is all very objective, as you know, is all very transparent mechanism. You have a rental income coming from these assets. So based on that, probably applying a very fair cap rate, it's not difficult to arrive at a fair market valuation. So yes, there is a probability of our monetizing part stake in these assets. Yes.
Right. So what's the percentage stake that you will be selling to the external investor in your commercial operations, and how is it that you're going to deploy the funds?
Well, I said I won't be able to discuss the specifics of this transaction, which is still kind of at a a stage where the due diligence process is on, so I'll not be able to speak too much. But yes, deploying the funds, yes, certainly it will be to pare down our debt at the parent level. So also probably part of it can be used for further growth of our business, including some more acquisitions going forward. But a good chunk of it would definitely be, already our debt is at a pretty manageable level. As you know, at the parent level, we don't have debt which is really ballooning out of control. It's still manageable. but that will be a sweet spot for us to pare it down further.
Clearly, investors prefer having exposure to the Indian real estate sector via the commercial route rather than the residential route. We've seen that in case of DLF and Prestige, they've also got similar deals. Are you also getting a sense that you could be doing a similar kind of a deal where you would be focusing more on the real estate business and not on the commercial business?
No, a commercial, for the simple reason that is it has a very clear visibility in terms of cash flows, because you have assured rental incomes. So there is a very fair and objective criteria to value those assets, as opposed to residential, which is typically a long gestation phenomenon, and also given the kind of stagnation that we witnessed for the last 3 years in the real estate residential piece particularly. So compared to that, there is lesser interest from the potential investors in the residential space versus commercial space.
What kind of revenue run rate are you witnessing across various commercial arms? Is the positive trend now sustainable?
Oh, certainly. Some of the leases which are due for renewals, definitely there will be upward revision, no doubt about it. And also some of the fresh leases that we have entered into are rates which are pretty close to what the market gives for comparable office spaces. But yeah, on a fully finished basis, once we have leased out all the available commercial space, we are looking at close to 1,520 crore of annual rental yields over the next 3 years.
Okay, so how are your residential operations panning out all across segments for you, and are you seeing good traction there?
No, all our flagship projects have had no problem in accomplishing sales. As you know, our prime project here in South Mumbai, which is Blue, which is ultra luxury high-end project, we have already finished sales here. Close to 99.5% of the project is sold. Similarly, the case with Panvel project, where also phase 1 is almost delivered, and phase 2 also, a significant amount of phase 2 has already been pre-sold. So similar is the case with Gurgaon. Our Enigma, which is a high-end project on the Dwarka Expressway, is almost 60% of it is sold. And Centrum, which is the mass housing segment, was also nearly 70% sold. So we don't really have any problem in selling the projects. In terms of pricing, yes, last couple of years haven't seen any hardening trend in the prices. We're not exception to that. But yes, compared with the market, our realization is better.
Okay, tell us a little about your overseas acquisitions, especially the ones in London.
Well, we have got only one project at the corporate level, which is coming under, which is 22 Hanover Square, 23 Hanover Square, which is in the Mayfair, prime central London, next to the Bond Street. So that project, as you know, was one of its own kind, and it's already received all the planning permission. The project work is going on at full steam. We have already pre-sold close to £46 million worth of flats there. And we have established new pricing benchmark in that area. In fact, one of the units, penthouse that we sold, was close to £7,600 per square foot, which was a record. Also, we have sold a few. But then, issue with the London market is that a lot of realizations are back-ended. You can't get more than 10% in the sales, and that too is through the escrow mechanism. But once this project is finished in 3 years' time, this is going to be a very, very value accretive proposition.
Okay, and what's the debt picture right now on your books, the plans that you may have actually to bring down the debt as well?
Oh, we are very comfortable with the current debt level, but as a matter of prudence, this debt level would be further brought down. And going forward, we don't have any plan to incur any substantial debt at the parent level. So the level that currently which we are is self-sustainable. You know, it can really take care of itself from all the realizations that are due from the projects. And on the rental piece, all the rental that are kicking in is more than enough to keep on servicing the debts.
Okay, Mr. Mittal, great speaking with you, and so glad that you could take time out and speak with us exclusively on what really are the prospects for Indiabulls real estate going forward from here.